Scene: a sign of Credit Suisse Bank is seen in Zurich, Switzerland. It's the year 2023 and the world is gripped in financial chaos. Over the past 5 years, the financial system has seen its share of volatility, and Credit Suisse, once one of the world's largest banks, is no exception. In a desperate attempt to stay afloat, Credit Suisse announced Sunday that it was selling itself to UBS, and in doing so, wiping out $17 billion of its additional Tier 1, AT1, bonds. The news, which comes after Swiss regulator FINMA announced Sunday that the AT1s were being written down to zero, has angered bondholders, many of whom were considering joining legal action against the bank. David Benamou, Chief Investment Officer at Axiom Alternative Investments and a holder of Credit Suisse AT1 bonds, said that he and probably most bondholders would participate in the lawsuit against Credit Suisse. The legal action comes after the EU authorities, including the SRB and EBA, issued a joint statement following Credit Suisse's rescue deal, reiterating that the Credit Suisse write-down is a one-off and common equity instruments are meant to absorb losses before AT1s need to be written down. However, as of the end of 2022, Credit Suisse had a CET1 capital ratio of 14.1% and a liquidity coverage ratio of 144%, suggesting to many that the bank was solvent with ample liquidity and was not in actual danger of failing. This led many to believe the write-down was politically motivated, as the Saudi National Bank and Qatar Investment Authority were two of the bank's largest shareholders. Adding further to the confusion, many were perplexed by the fact that Credit Suisse's AT1 bonds were offering much higher yields, at times, almost 10%, which was meant to reflect the higher risk investors were taking. The Ethics Foundation, which holds over 3% of the bank's stock, made it clear that it would be consulting with its lawyers on possible legal action, saying Swiss authorities used emergency powers to pass two key pieces of legislation without shareholder approval. As it stands, it is unclear what the future holds for Credit Suisse and its bondholders, but it is safe to say that the entire ordeal will be examined in great detail by both legal professionals and regulators alike.